I am excited. Yeah, I am. I'm actually excited. Gary Black is my guest today. I'm really excited to have you on the program, Gary.
Hey man, how you doing?
Really, really well, thank you. Listen, let me just for my audience, Gary is an investment advisor, has an investment fund called the Future Fund, and is a frequent guest on CNBC. I want to learn more about you in a minute, Gary, but for right now, I really just want to start out with, I'm sure, the question that my audience is most interested in hearing about, and that is you recently sold some of your position. You're known as a bull, and you recently sold your position, some of your position
Yeah.
on Tesla. Take us through the thinking process on that decision, not just why you did it. That would be too easy. How did you come to the conclusion?
So it's funny because we were talking to a couple clients about it who own Tesla, and we kept saying to them, "Look, you really should lighten up." And the reason we felt people should lighten up, you got to think about short term and long term when you're a portfolio manager. Long term, we still like the stock. We still think it's worth about $250. We can go through, how we calculate that. But we go out to 2030 earnings. We try to figure out what the company's going to earn over the next 5, 10 years. And then we come up with a value based on 2030 earnings. We put a PE on it and we discount it back. But in the near term, what we're seeing is that two things. One is that first quarter deliveries are coming in very light. The street is thinking first quarter deliveries will be about 475. We're kind of about 425. So that's about a 12% miss. And then one of the things that if you're a growth manager, you always look at revenue growth and earnings growth because that determines the multiple. And we're looking at revenue growth going negative for the first time. This is on Tesla since COVID, which was second quarter of 2020, and that's going to persist for a couple quarters. So our thinking is that not only are they going to miss first quarter volumes, but people are going to re-rate the multiple down once revenue growth on autos, which is their
Right.
largest business. Once auto revenue growth goes negative, which it will this quarter, people are going to say, well, why am I paying 50 to 60 times earnings for a stock that has negative auto revenue growth? And that's the challenge. So near term, we just didn't like the stock anymore. And as we were talking to clients, we realized that look, we should do the same thing for ourselves. And we got a bunch of clients out, in the 210 range. We got ourselves out at, I don't know, I think it's about 185.
Uh-huh.
But here we are at 160, and I think the stock could go a lot lower once, because the street is still very slow at bringing down the first quarter estimates, and that's typical street and cadence that they don't really do much research during the quarter. They're out marketing. They get paid on commission. I think I've told people this. Wall Street is not, they're not research analysts where they're constantly sitting at their trying to figure stuff out. Their job is to bring in commissions for their firm. And then a couple of weeks before the end of the quarter, they'll update their models, and that's when you usually see, estimates start coming down. And sure as we talked about it, you're starting to see that Wells, UBS, a couple others have all brought estimates down in the last couple of days. So that was the thought process. We still like the stock long term. We kept about probably about 40% of our position. We're down below 3%. We were at one point we were actually at 10 at one point, but we've been whittling it down over the last couple of years because, this goes back to Elon cutting price, which we just thought was dumb, because his view was that, hey, we can make it up on FSD if we had more cars on the road. We'll make it up by charging people FSD. That sounds good in theory, but in practice, when everybody matches your price cut, you're really not getting more cars on the road. And so what you've seen is you've had pricing down 15 to 20%, and now you got volumes they're going to be negative in the first quarter. So you're really not getting any benefit from your price cuts, and we certainly haven't liked that.
So, Gary, the one question when I've heard you say that in the past that I've just really been aching to ask you is, as a marketing guy, because I was a
Yeah.
manufacturer for 30 years. I've been in marketing my entire career. As a marketing guy, I do think like Elon in terms of a TAM. If I lower my price, I had a big fight with my partner for years and years. We had bicycle water bottles famously, and we sold the highest quality bottle on the market, and my partner wanted to also sell a cheaper version. And I fought him tooth and nail. we eventually started selling the cheaper version, and our expensive version didn't drop one unit in numbers, and we added another, few 100,000 bottles of the cheaper version. So if Tesla lowers the TAM, even and lowers the price, even if the competitors also lower, he now is addressing a different market. He's addressing someone who can afford a $35,000 car versus a 40, or a 45 versus a 50. Isn't that true?
Yeah, and we've been a big advocate. So let's go back to Master Plan One, which was, bring out the Roadster, bring out Model S, bring out Model 3, and by extension, bring out what we call Model 2 at the time. And in 2021, we were big champions of this idea that they needed a $25,000 to $30,000 vehicle. You can go back on our Twitter feed and you'll see that's all we talked about. That was a big catalyst. And then to our surprise, I think it was fourth quarter of 2021 earnings, Elon said, well, it's not something we're currently working on, which we were, upset by. We thought that was dumb. And they, in marketing terms, they call that a flanker product. When you're, trying to compete on price, you don't want to take your premium product down. What you do is you bring out a flanker product and use that as a fighter brand
Right.
to, basically navigate the price wars. And I just, my background, I was a product manager on Tylenol, J&J,
Right.
and we had to deal with generic Tylenol, store brands, and cheaper versions. And that's what you do. You bring out a flanker product. And to me, when Elon said, "Hey, that's not something we're currently working on," I thought that was just wrong. And so we're a big fan of bringing down the price. But to your point, if you bring out a flanker product like a Model 2 and you left Model 3 and Model Y, you can bring them down. You can bring them down in line with cost of goods declines. You're not really going to lose much volume. You're not going to cannibalize much of the Model 3, Model Y volume. That was our view. So, but the fact that they never really got started on the Model 2, as we used to call it, and they're still not going to bring it out now. We're hearing, early 26. So to me, that'll go down in history as one of the big mistakes Elon made in not bringing that out or not focusing on it earlier. And I know we get all kinds of grief from people on Twitter. It's like, no, it wasn't our idea, but we were a huge advocate of it. And when, shame on me, when they said they weren't going to prioritize it, I should have gotten out of stock at the time, because you knew at that time that if the alternative was they would probably bring down prices, their capacity kept going up, and they weren't advertising. They still don't advertise much. So and we could talk about this too. You get early adopters buying Teslas, and that's what's happened. But now, as you want to go mainstream, you got to talk more about, charging convenience and lower cost of ownership and superior technology, superior performance. And you need to advertise. You need to communicate that to customers in order to generate more growth. So here we're in a situation where every year the production capacity goes up, but they're not doing anything to stimulate demand. And you've already had the early adopters buy Tesla. So again, shame on us. We should have realized that when they said, well, it's not a priority, that, that probably would have been a good hint that we should have trimmed the stock or gotten out of the stock.
So we have you and I agreed almost all the time last year.
Mm-hmm.
Toward the end of 2022, I was pushing on the advertising. When he then
Yeah.
cut price, I said I can see where that could be a positive, given where we are with this boom bust that we just went through with COVID, and having raised the price and raised the price and raised the price, bringing it down again would make sense. So I went along with that for about 2/3 of the year. But by the end of the second, third quarter, I was changing my tune again and saying, okay, now it's time to do the advertising. You've basically, you have a bunch of folks out there, like you're saying, the early adopters that have done it, but somehow the Midwest hasn't got it yet. And when I say the Midwest, I mean everybody from Arizona to New Jersey.
Yeah. You got California and Texas has it.
Right. And so you need to do something to make these people aware of the fact that this is a practical decision on their part to purchase this vehicle. Why do you think, you're probably a lot closer in communication to Elon Musk than I am, I'm guessing by a lot. Why do you think he's resisted so heavily the idea of a substantial advertising play?
I think it's principle with him. I think he's an engineer by training. And I think he says, well, look, the product speaks for itself. And you look, with the early adopters, you're right.
Yeah.
Word of mouth is important. And look, the early adopters would generally buy because it was good for the environment. And through word of mouth, you sold a lot of Teslas. And that was fine. But now, in order to go mainstream, you have to communicate. And I call these the rational pragmatists. You have to convince them that going EV makes sense because they're not doing it because of the environment. They're doing it because it makes sense financially. And so when you think about what the cost of an EV is versus, an ICE car, especially when you take in $7,500 an EV credit, it's much cheaper. And, the prices have come down and it's much cheaper to maintain because you don't have to put gas in and the cost of maintenance on an EV is much lower. So to me, and again, I'm a marketer by training, and I used to fight the Tylenol wars against Advil. You have to come up with a reason why the rational pragmatist should be buying an EV. You can't just rely on the fact that you're doing something for the environment or there's word of mouth. You have to communicate with them. And the only thought I have is he's just stubborn. He just believes car is so good it'll sell itself. And I think again, when we're dealing with early adopters, that rationale is good, but we're beyond that. We're
Right.
now trying to get the mainstream. So I'm not sure why, but I just met with management a couple of weeks ago, 2 weeks ago, and
Yeah.
they are now going full bore on trying to come up with compelling advertising. It's digital, and you're not going to see anything on mainstream media, but you will see stuff on YouTube. You are seeing stuff on
Right.
YouTube
Right.
and other social media platforms where they are trying to exactly what we just talked about convey cost of ownership is much lower, charging convenience, which is the number one thing that people talk about if you ask them why they don't own an EV. That is something, because they have all the superchargers all over the place, it is pretty convenient to charge your EV, so, and your Tesla. So I think it's starting to happen, but it should have happened a couple of years ago. And so, to me, not bringing out the $25,000 vehicle was a bad mistake because instead they cut price, and then waiting till now to start advertising to me was also a mistake. And look, I think Elon's a brilliant engineer, brilliant product guy, but he doesn't surround himself with creative marketing types the way Steve Jobs did, the way Tim Cook does. And yet, he's got aspirations to overtake Apple and market cap at some point. You need to have those brilliant creative types around you, as well as the great engineers. And I just don't think he's done that.
So we're 100% aligned because that's what I've been calling for the last week. Has been I wrote the book, The Elon Musk Method, where I point out the 16 places where I think Elon is totally brilliant, totally a top leader, top communicator. But maybe the one place where he's not great at all is exactly where you were in your career before you went to doing the stock market. No sales and marketing guy. He doesn't have a top sales and marketing person. And the way it came to me was kind of the flip, not so much on the marketing side, but on the sales side. If my
Yeah,
sales team had ever come to me and said, Randy, I know we have 5.5 million bottle capacity this year, but I'm sorry, we're not going to be able to sell more than 4 million of it. I would have either thrown a hissy fit or thrown them out of the office. I would have,
sure.
it would have been, and I don't understand why that's not happening now. We've got capacity for 2.5 million, sell the capacity.
Yeah, and look, he's got one lever that he uses, and you and I both know there's lots of levers in the marketing toolkit. He's used price, and when I was with management again 2 weeks ago, one of the things I was trying to find out is have auto gross margins bottom, because to me, getting the $25,000 vehicle out quicker is a catalyst.
Right.
Cybertruck ramping up should be a catalyst, although it's ramping up slow. Um, Raising price, or at least not cutting price more, would be a catalyst for Wall Street. And I didn't get any sense that that is a true statement. As I talked to them, you got a lot of eye rolls that no, that's not a true statement, that EV margins have essentially bottomed. I got the sense that, they would be willing to cut price again. And I think once we get to second quarter, which is another reason we trimmed our possession, I think, they will cut prices again, because when you get to second quarter, you've got production ramping up again. I think the street is looking for 510 in production, 510 in deliveries, and we're barely going to do 420, this quarter. And
Right.
so I think, we're going to be in a situation again in the second quarter if they don't figure out how to drive volume using different levers than pricing. That's going to be a challenge for the Tesla stock price. And so I wish they would hire some people, and I'm not volunteering for sure. I just wish they would hire some people from consumer products companies who could help them with their marketing. I mean, they have Linda Yaccarino running Twitter. She's an advertising person. I'm sure she could come up with some people that they could hire who really do get how do you convince the consumer to go EV? And to me, it's missing. And you hear that in every conference call. They surround themselves with Tom Zhu and Drew and
Right.
others who are engineers by training. You don't hear a lot about the consumer. Even the way Elon talks, it's always about production and manufacturing excellence. That's great, but what about the other half of the equation, which is how do you get the consumer to buy a Tesla? First of all, how do you get a ICE customer to buy an EV, which will benefit Tesla because they own a big share of U.S. market,
Right.
60%. And then if you convince somebody to buy an EV, how do you convince that EV purchaser to buy a Tesla? That's just missing, and I never hear it whenever I listen to them. So I struggle with the idea that they could ever be as big as Apple. When you look at Apple, Apple had a great product, but they also had great marketing. And
Right.
if they really want to be at least the same size as Apple, they've got to develop great marketing skills, great branding skills, great communication skills, and it's just missing. It's just not there.
So Elon has said recently, well, it's been a few months now, but he said that the Optimus will be by far the biggest product for Tesla. It'll just swamp the rest of the business. It'll make the automotive business really tiny. Previous to that, he talked about Robotaxi swamping the auto business, being much bigger in terms of revenues and profits than the auto business. So now we have in Elon's mind, as the CEO, we've got Optimus, massive amounts of revenue. We have Robotaxi, something under that. And then we
Yeah.
have the auto business, something under that. How do you, maybe Gary Black, not even the investing Gary Black, but maybe the watching from the sidelines, an interesting, massive development in disruption potentially take place. How do you stand back separate from investing and look at what's happening in those two spaces and think about where we are and how soon that might happen?
Well, and that's one of the challenges, Randy. There's always this silver bullet, if you will. And when I first started following the stock, it was Elon with FSD is going to drive itself, and they're going to have a robotaxi network. And he used to talk about it, and he's since softened his stance on that. And so that was the mantra for, I don't know, 3 or 4 years. We're going to have this huge robotaxi network, the cars driving itself, but it never happened because obviously FSD hasn't ever gotten good enough yet where it can drive itself. It could at some point, but it's taken much longer than they would have thought.
Yes.
And now instead, we're talking about robots. And, I posted something this morning. There was a competing robot that, is talking and does a lot of the same thing as the bot does. And, it hands the person, he says, I'm hungry. And he's got a bunch of things in front of him and he hands him an apple. And the person says, well, why'd you give me the apple? He says, because you wanted something that was edible. And this was the only thing that was edible. And then, the rest of the stuff was trash. And he picks it up and he, collects it and he dumps it. I mean, there are competing firms. And again, I'm not an engineer, but you can find lots of competing firms who can do already what bot wants to do. Now, what Tesla has going for is they have manufacturing excellence and they could probably produce a bot at scale where some of these other companies couldn't do that. But until there's a working prototype that does more than walk around, and there's a use case, and there's pricing, I can't really calculate a TAM, and I can't really calculate market share until I can compare it to the other products that are out there. And that's the thing that frustrates me. And a lot of people they just make up numbers. They say, well, you could save $15 an hour and, let the robot work, I don't know, 80 hours a week or 100 hours a week, and you could make 200,000 of these a year, and voila, that's worth $10 billion. It's like, that's great, but that's the supply side. It has nothing to do with the demand side. And so I do believe that Tesla has the manufacturing expertise to scale up production of a bot, but there's no prototype yet other than one that walks around and picks up some stuff. And I have to be able to compare it to what else is out there in order to come up with a demand function so that we could see, what it's going to do. And that was my big frustration. When people would talk about robotaxi, they would just do this, the car can drive so many hours a week. You can charge this much per hour. This is Tesla's take rate, multiply it out. And again, voila, you get, $10 billion in profits. And I saw people do this all the time. And I'd say, but where's the demand side of this? And that's what I struggle with, that, you know, you got to think about supply and demand. You can't just think about supply. And so
Yeah.
I do think that the robot could be big, but let's just be prudent and wait and see the working prototype, what it can do, what's the use case, what does the pricing look like? Let's compare it to other robots out there, because everybody's working on this now. And then we make some calculations to see how big the market can be.
So that still sounds like the investor Gary. So I'm wondering, I want to hear the sales and marketing Gary. I want to hear the guy back at Bayer, looking at the bot that your company's brought you the bot. They're showing you what it can do. They're talking about what the TAM is, and they're saying we're going to replace all labor, basically. You're looking at videos, you're seeing the competitors. There's 21 of them out there now, and they're all showing various things that they're doing extremely well. Some are walking fast, some are moving fast, some are now talking, some are moving smoothly, like the Optimus. And they're seeming to get better and better and better at what they're doing. And so your company says to you, I need you, Gary, to go now and put me together an analysis of what the potential TAM is here. I'm sitting there in that position as an entrepreneur, and I'm saying to myself, if I had this in my hands right now, I'd be looking at a TAM of the way that I've described it on this channel, of millions and millions and millions of units. And I think that's where Elon is too.
Well, and that's fine, but you do some math, and that's the challenge I have for all these people on Twitter. They don't do any demand math; they do supply math, and they say we could make this many per year, and this is how much it could save at $15 or $20 or $75 an hour in labor, and they just multiply out a bunch of numbers. That's not a demand analysis. A demand analysis would be take the robot and what it does and figure out what are this, again, because there's no prototype yet, right? But
Right.
let's suppose it can, do gardening. Okay, so we can look at the market for gardeners and say, okay, if instead of having, however many gardeners, because I haven't done the analysis, but however many gardeners there are in the U.S. and in the world, you use a robot instead to do that. And instead of this many housekeepers, you use a robot to do that. And instead of, maybe the robot can, work in a factory packing stuff or picking up stuff, you can use those segments, and, but you still need a demand analysis, right? And what I get tired of people is they look at it from a supply standpoint and say, if Tesla can make this many, this is how much profit it can make. And so what I would do is wait till the product shows me what it can do, and then figure out what are the jobs it can replace. And you can look at how many people actually are employed doing those jobs, and that's how you come up with a demand function. You'd look at eight
So
different segments.
yeah, well, Scott Walter has done that. Cern Basher has done that. I've done that.
No, Turnbasher hasn't done that. He looks at it from a supply standpoint. I
No,
don't.
I've had CERN on my channel, but I'm a manufacturer. Okay, for 30 years, I was plastics manufacturer. For the last 15 years, I've been a marketing consultant, and I've been in so many factories. And I can look at I can tell you right now, the first time I saw the product, I could have used it in my factory almost the way it was in the second iteration. Now, in the current iteration, I could have easily had it sitting in front of extrusion blow molders, having it sit in front of injection molders, have it sitting in a department putting caps on bottles. These would have been easy things for this product to do. I recently was working with a t-shirt silkscreen, silkscreen guy that does silkscreen on T-shirts. No big deal for the bot to pick up the T-shirt from the printing section and put it onto a dryer, and then at the other end pick it out of the dryer and put it into the folding machine. There's not even folding it himself necessarily, but putting it in.
But that's fine. But come up with the number of people who do that,
Yeah, we
and then
did. Yeah.
all right. Well, I
Yeah.
haven't seen that. Most of the analysis I see is Tesla can make this many bots, and let's assume it can take out a worker who makes X dollars an hour,
Right.
and then they multiply it out times 80 or 100 hours a week. That's not demand. Demand is what you just said. You figure out all the different use cases for the bot, and
Right.
if it's getting rid of people who make T-shirts for a living, that's a segment of the population. You can figure out how many there are. You can say, okay, if the bot can work 80 or 100 hours a week, how many people can it take out? And then you can figure out a value based on that. But I haven't seen people doing that. I've been seeing the opposite. I see the supply side analysis, and there's very little where people are saying, okay, here's the 10 or 12 or 15 different use cases for the bot. Look at how many people are employed in the industry and figure out how much demand for bots will there be and come up with a price. And if it's a rental price, you can do that.
Right.
But I
Right.
just haven't seen that type of analysis right now. I'm sorry. Maybe I missed it,
Yeah.
but
Yeah. So
it just feels like that is not what's been out there.
yeah. So what we did on my channel was Scott and I have done it a couple of times, but for instance, just in the business I was in, the bottle manufacturing business, I
Mhm.
had, 3 shifts, sometimes 4 shifts of people just sitting in front of a blow molder and making sure that the bottles were coming out of the blow molder the right way. I looked that up. There's about 100,000 employees in the United States that have that job. Now you've
So
got,
how many robots were you able to quote unquote rent or sell by looking just at that one business? Do you remember?
so again, basically, if 100% bought it, now you're never going to get 100%. So you got 100,000 individuals in that job position. But
Mhm.
what would the take rate be? I don't know. Would it be 30%, 40% that would be dying to get that bot? Because it's a hugely, let's say, a very highly paid position, actually. When I say highly paid, probably today, maybe $25, $30 an hour for that person to sit in front of that machine. And their only job is to make sure that the machine continues to function the way it's supposed to function and move bottles into boxes, get the boxes off to the next position.
But how
Uh,
do you know it can even do that? How do you know it could do that? We haven't
Based
seen a
on,
prototype do that. I mean, you're
yeah,
betting on the fact that
yeah,
just like FSD, right? People were betting on the fact that the car would drive itself, which it
right.
never has. So how do you know it can do all that?
Yeah. So again, you don't absolutely, Gary. No, I'm not. I'm
That's
not
a
trying.
challenge.
Yeah,
It's a challenge.
I'm not saying we know absolutely it can do that, but we've seen it pick up a T-shirt. If it can pick
Yeah,
up
we've seen it walk around and pick up stuff. That's
if it
exactly
can
right.
pick up a
But
T-shirt and move it from the printing press to the dryer, which is
yeah.
sitting right next to it, all it's got to do is pick up the T-shirt and put it on the dryer. That's another 100,000. I happen to be a similar number of people that work in that T-shirt printing industry that are doing those very simple tasks like that. That it looks like the bot. Maybe not this week, maybe next week, maybe it is this week. I don't know because I haven't we haven't tested it in those environments. Obviously, I'd love to see that as well. I'm just saying it looks very, very much to me like it is already, if not 100%, 90% of the way there to being able to do those functions.
All right. Well, again, it's one of the things that I would like to see some math carry through to the end and say there are this many people in the industry. The bot can work, I don't know, 100 hours a week. Therefore,
Right.
you need this many bots, and this is the pricing. And then if you price times quantity, you get the revenue.
Yeah.
I would like to see an analysis like that. And I hear a lot of concepts thrown around, but I haven't seen a lot of demand numbers. I hear, oh, well, it could, press these T-shirts, and it could, do gardening, and it could, pick up waste and, stuff like that. But I want to see pencil to paper or, calculator saying, this is how many, this is the price per hour that we're going to be able to charge for this. And what you said is right. I mean, if somebody makes $35 an hour, the demand for bots can be higher than if it only makes $15 an hour.
Exactly.
But that's the type of analysis I'm looking for. And I just haven't seen much of that. It's a lot of hand waving and a lot of conceptual thinking, but I want to see, real price times quantity, times whatever the rate per hour that you could rent these things for. And
Sure.
therefore, that's what the incremental revenue for Tesla is going to be. I just haven't seen that.
Right. So, a shout out to my channel.
Okay.
Since I am an entrepreneur and a sales and marketing guy, that's what I
Yeah.
tend to do. Okay. I have been doing that my whole life. I've had about 40 different businesses, and this is my most recent is this YouTube channel. And of course, I got all the same issues, right? What is my TAM? How do I market it? All the same issues that we're always dealing with in that kind of business. Gary, so I have a 2026 theory. I've been
Go
talking
ahead.
for about the last 9 months. My 2026 theory is it all comes together in 2026, that the bot will be in production and providing some kind of revenue, that the full self-driving will be fully available. It will actually work 100% by 2026, that the Generation 3 vehicle will be in manufacturing, will be starting to ramp. Maybe it'll be even well along in the ramp and sometime in 2026. The Cybertruck will be fully ramped, and we'll figure out what is the real TAM on it. Is it going to be, $500,000 a year or $1 million a year? What's the numbers going to be? So all this is going to come together in 2026. What do you think of my theory?
I think the Cybertruck will be there by 2026. I have no idea if the bot's going to be ready by 2026. Um, Full self-driving, I don't know. I've been hearing it for 4 years that the car drives itself, and we're still not there. And the most recent thing is, people talk about, well, supervised driver assist. That nobody's going to. I mean, that's already in people's numbers, right? People like me already say, okay, take the number of Teslas, take a global take rate.
Right.
I use 12.5%. I use $199 a month. And by 2030, like, we could go back to 2026. I'm coming up with about $1.90 in earnings per share. I think 2026, it might be, I don't know, 50 or 60 cents a share. It's not a huge number. Now, where the numbers get big would be if the car truly can drive itself
Right.
without any human intervention, then you can have a robotaxi network. That's where the numbers get huge. But if it's just supervised driver assist, that's already in everybody's numbers. And where I get into debates with people say, well, if it can really drive itself, the take rate's going to be 100%. And it's like, well, right now the take rate is like 10. So if I go to 12 or 15, I'm still giving them a little benefit for that it's going to get better. So I don't know. Maybe FSD will continue better. I just drove around Chicago with Brad Ferguson, and we encountered issue after issue. The car is not able to drive itself yet. And maybe it's
Right.
just because Chicago is tough. But it will be, I think, at some point. But will it be good enough that it's actually a robo-taxi as opposed to it just allows people to drive, and take their eyes off the road so they can, play a game or something like that? I don't know.
Right.
I just struggle with the whole idea because it's been 4 or 5 years where people have talked about it and it hasn't happened yet. So FSD, not sure. Robots, I don't know. The $25,000 vehicle, we believe will get there, and in my model, I build it in. There's going to be some cannibalization of Model 3, but I do think there's a lot of incremental volume with the $25,000 vehicle. So I actually build that into my model. So by 2030, I'm assuming Tesla becomes the largest automaker, that they're making and selling 9 million units a year. And again, I'm coming up with about $18 in earnings from today. It's about three, so six-fold increase in earnings.
Right.
And then the question is, okay, at that point, EV adoption is probably 50%. So a lot of the growth is behind it. What multiple do you put on Tesla in 2030? And I use a rule of thumb: 2 times growth, or even 1.5 times growth. So if it's growing at 20%, you put a 30 multiple on it.
Right.
You're at 540. Discount that back at some cost of equity, and I get $250. So back to my original point, I think Tesla is still a good long-term value, looking at it from a theoretical standpoint. But my worry is, I got 2024 and 2025 where volumes could actually decline, and then revenue growth, because they took pricing down, is declining. and this is in the auto business, obviously,
Right.
what kind of multiple does the market put on something where the 90% of the business is in decline? I don't think they, put a 55 multiple on the stock. That's the challenge I have. But 2030, it could be worth a lot because to your point, at some point you get the $25,000 vehicle. Cybertruck continues to ramp higher, and I'm a big believer in the Cybertruck. I've been a fan of it since I saw it, and I do think at some point the bot comes out and they'll get some incremental volume. But it's too soon for me to say what kind of market share they're going to get with the bot because I don't know what other products will be out by 2026 when it comes out. You got to see what else is out there. If there's 20 different bots, Tesla will get 5% of them, right? And we just have to see how good they are.
What about the other two existing businesses? What about energy? Energy, Elon says, will be bigger than cars. I've done a bunch of analysis on energy. A bunch of folks have. And most of us are thinking if he really does get to a terawatt of energy per year, that would be a very big number. But where do you see the energy business right now? We're, I guess, going to hopefully have a second facility producing
Yep.
megapacks by the end of the year. Where do you think we go?
So I've got in my model, I've got energy going up sixfold between now and 2030. And, look, I think it's going to be a huge business. And I've got margins going from, I think they're about 20 today. I've got them going to 30.
Okay.
And so I give a lot of credit to the energy business, and they're in my numbers. And then, in the we'll call the services business or storage business, I've got that growing pretty rapidly as well. But it's again, it's not. It's starting from such a small base, Randy, that even if
Right.
you go up fourfold or sixfold, it really isn't, that big as a percentage of the total revenue. I mean, the energy business gets big, but even if you go up six times, it's still not as big as the auto business in my models. So
Right.
I
Okay.
don't know. I look, I don't profess to be, as knowledgeable about the energy business as I am about the auto business, but I do think they're going to grow pretty rapidly, and I bake that into my numbers.
And what about the charging stations?
And the charging stations, well, look, it's a great business. You will see charging become the new gas stations, and there's a lot of ancillary benefits that you can charge for. You could put Dunkin' Donuts or
Right.
Starbucks or others attached to them. And look, the charging is going to continue to get better and better, and faster and faster. So it becomes, another business that I think becomes very big. But again, you're starting from a small base, and I do think there's a lot of revenue and profit there. But I'm building that in to my numbers. And again, I'm not in front of my computer right now, but
Right. Right. Right.
it is a very fast growth business, but it's starting from a tiny, tiny base.
So if you take it as some of its parts, so sometimes people take a company like Tesla and they say, well, okay, we've got the auto business as the biggest part, but we've got all these other businesses under development, some of them growing fast, some of them growing slow, some of them that are still nascent. They're not even, producing any revenue yet. Do you sometimes put some kind of an option value on the stuff that looks like it's has massive potential? In other words, maybe the robot is uh, a
And
longer shot right now, but the potential is so huge.
yeah, so that's a good question. And what I try to do is I model out the businesses I can see. So it's EVs, FSD, the charging business, if you want to call it that, the energy business, and I model it out and I put margins on it. And so that all goes into my valuation. I currently don't do that with Dojo, we'll call it Robotaxi or bots.
Right.
And the one that I'd probably be most likely to do it with is bots, but I want to see a prototype first to see how good it is. I'm not going to just rely on, well, Elon's a brilliant, engineer, and therefore he's going to have the best robot. And because they have manufacturing excellence, they're going to sell a lot. That's just not the way, as an analyst, I develop a forecast. I want to see what the bot can do. But if you said where do you think the most potential is, it's probably in the bot, right? Because I don't think Robotaxi. I just have always maintained that yeah, they'll have a Robotaxi at some point, but so will a lot of the players. And, recently, a lot of the bulls have gone from, you know, Tesla's the only one that can do it to, yeah, because Elon's saying the Chinese are going to be really good at this too. So, with robots, you want to see who else is doing it by the time it comes out before you start putting a number on it. But I think looking at it as an option value is a fair way to approach it. But I'll probably in the next year or two, as I see a prototype, I'll probably try to come up with a value, for the road because I've just done some back of the envelope calculations like everybody else,
Right.
and you can come up with some really big numbers based on your assumptions. I just don't know how it's going to be priced, and the pricing is going to be based on the value of the labor that it's replacing. So if
Right.
somebody's making $100 an hour and it's a really sophisticated bot, then you can charge more than if somebody's making $15 an hour. And look, you may have different levels of bot, right? Just like you have different levels of car. You have a Model S that's a high-end car, and you have a model called a Model 2 that's a lower-end car. You may have the same thing with the robot. So I'm excited about it. Don't get me wrong. Again, we are long-term owners of the stock. It's just the reason we took back to your original question. The reason we took our position down was because in the near term, meaning the next 2 years, 24 and 25, we think it's going to be really hard to grow the EV business. And look, 26, you're right. You get the $25,000 car out. And maybe FSD, you'll have something that's self-driving where you can actually maybe I've long felt, remember old Sirius Radio, you give it away for free for the first 3 months, six
Right.
months,
Right.
get people used to it, and then they don't want to give it up. And
Sure.
that business model seems to work pretty well. If you want to think about FSD, you got to get people used to drive, letting the car drive themselves and get find other things to do, and then maybe they pay. I don't know. They're not going to pay $199 a month, but maybe they'll pay $99 a month. That's the interesting thing to me is what can you charge for a level 4 car that 99.99% intervention free. Would people pay $199 a month? I don't think so. But $99 a month, probably, right? Because your time frees up and you can do other things. And to me, that would be an interesting exercise is trying to figure that out.
Yeah, in fact, I've heard of a couple of other models. In fact, I suggested a model a while back that there will be a different pricing structure for people that are using it commercially, as opposed to those who just want to use it to go to
Yeah.
work and go to the store. So you might be charging 12,000 to or 8 or 7 or 6,000 to the person that's just going to use it to go to the store, where you charge 30 or 40 or 50,000 for the person that sees it as a business.
Yeah.
Other people have talked about charging by the hour, so charging by the hour of use, so that if your commute is only 15 minutes, you're not paying the same as somebody whose commute is 2 hours.
Yeah. Look, I don't want to get into the situation that I've just seen in the last few years where people putting these outlandish price targets out on Twitter, $1,500, $2,000, because they make up a bunch of numbers to get to the price target they want. I want to say, okay, based on the use case, based on the TAM, based on, the pricing, what is realistic for bot,
Right.
for robotaxi, for even charging stations, and let's put that into the valuation. But what I see on Twitter, a lot of it's just I call it mental masturbation. You're playing with numbers and you're making up numbers and you're just throwing up there. It's got to be based on something, and it can't just be based on what the capacity is. It's got to be based on some demand function. So, I think the next couple of years will be interesting. But look, the stock is trading at $160, a market cap of let's call it 500 billion. It's not putting a lot of value in for these
Right.
type what we're calling options. It really isn't. So, and that could be the opportunity, quite frankly. But you got to show us what the prototype looks like, and you got to figure out, okay, what is the use case, what is the TAM, what is the market share, before you can actually start putting numbers out there that go into somebody's price target.
So we'll go right back to that original question, because I didn't ask you the other half. What's your re-entry point?
I don't know. At this point, I think it's too soon. I think, at some point the stock gets ridiculously cheap. Maybe it's 100, maybe it's 120. We got to that in January of 23. We got to, I think, 108.
Right.
And I think if we saw a 108 number, we would get back in. But you got a lot of downside when they're going to miss where consensus is by at least 10-12%. And again, that's a volume miss. The earnings miss is much bigger. So, what I don't want to have happen is if everybody sees auto revenue growth goes negative, which it
Yeah.
will this quarter, do people say, you know what, why am I even putting a 50 multiple on these earnings, which are going down? Let me put a 30 multiple on it. And, you could see that. That's what happened in January of 23, because remember, there was a lot of price cuts in the fourth quarter of 22, not in the US, but China and Europe. And then, of course, you had the Twitter situation where, Elon had to sell a bunch of shares to buy Twitter.
Right.
That, could you see a 30 PE on the stock again? You betcha, you could. So I don't want to be jumping in too quick. And, look, when the stock goes up a point or two, everybody gets excited. Well, maybe you should get back in. We're not there yet, Randy. We're probably going to be cautious. We got out. I remember a couple of years ago. This is before the splits. We got out at like 860, and then we got back in around, I don't know, I want to say 550, 600.
Uh-huh.
I mean, I think you could see the stock get down to 120, 140 easy in the next 6 months. So we're gonna take our time.
So I know you've got a hard cutoff in a few minutes, but I was curious to know what you think about the economy. Where do you think we are on inflation? Are we going to have a recession? Are we going to have stagflation? Where are
Yeah.
you right now on the next 9, 12 months or whatever with the economy?
Yeah, I think the Fed's doing a pretty good job, and I'm not always so generous with the Fed, but I think the Fed is navigating this need to at some point bring rates down because you do see growth slowing. You see GDP growth slowing. You haven't really seen the labor market slow, but you've seen like retail sales were weak yesterday. So you're starting to see the economy slow, and I think you're going to see more slowing in the months ahead. So I think the Fed's doing a reasonably good job of giving us a path. We'll see next week what the dot plot looks like. Is it going to be 3 cuts this year? Is it going to be 2? I don't think we're going to see cuts until June or July. You're not going to see anything next week. And then the question is, will the economy slow so fast that they got to move quicker than that? I think they're doing a good job. So, you'll see growth slow to the 2 to the 1 range, and then you'll see rate cuts kick in June, July. So I do think we can avoid a recession. You got obviously an election later this year, and Fed officials don't like to be political. You wouldn't want to create a recession, which would hurt Biden. Not that, I think the Fed cares one way or another if it's Trump or Biden, but they don't want to appear to be political. So I think they're going to try to play it kind of middle of the road. They'll start taking rates down June, July. In theory, that should help Tesla because, your payments will come down in theory.
Mm-hmm.
Although I'm not a big believer that I know Elon is, that rates going up cause Teslas to be hurt. I just don't buy that. Because they could have always, instead of taking down prices, they could have bought rates down with the lenders.
Been saying
And
that forever. Yep.
they could have leasing terms that were different. As you know,
Yes.
they wouldn't give people fair market values on leases, which is crazy because that's what everybody wants. So anyway, I think the Fed's done a good job. I think we can avoid a recession. I think, a soft landing is the most likely outcome where growth slips down to like 1%. Inflation is, already dipping below 3%. Can we get it to 2? I don't think the Fed needs to see it 2. I think, 2.5 to 3 is fine. And so is that Goldilocks? No, but I think we can navigate a soft landing from where we are.
What about the market? Do you think we're over our skis? Do you think we've
No, I think the market's relatively okay. I mean, I always look at this is the old Fed model. You take the PE, which is about 21 times this year of the S&P. You flip that on its over, and that's about 4.8%, give or take. You compare that to a 10-year Treasury, where you think the 10-year Treasury is going to be. The 10-year Treasury now, I mean, it's gone up a lot in the last week or two. It's
4.3,
4.2.
I think. Yeah, 4.3.
Yeah, 4.3 maybe. But it will come down as the Fed starts cutting rates. So, if you do see the 10-year get back to like 3.6, 3.7, that spread of, let's call it 4.8 versus 3.7, that's a normal spread of, 100 to 125 X
Okay.
what we call equity risk premium is about right. Right now, it's a little bit narrow, but I do think, again, the Fed is going to cut rates, so you will see the 10-year come back down. So I don't think the market's overheated right now. We're still fully invested pretty much. And so we're thinking, the market's probably okay from here as long as the Fed does start cutting rates by June. If the Fed, suddenly reverses it, we're not going to cut rates, and inflation's not coming down fast enough, and the economy's too hot, then you're getting a little bit into the danger zone with the E over P ratio less the 10-year treasury at 60, 70 basis points. That's pretty narrow by historic terms. It's been between 100 and 100 quarter, 67% of the time. So
Well,
we're
Gary,
we're okay with where the
I,
market is.
I could do this for another hour, but you're out of time,
Gotta
and
go.
and usually an hour of this is about all my audience can take. But
Yeah, I get it. I get it.
I
All right, Randy. Thanks for
great,
spending the time.
greatly appreciate you coming on. Got almost 100% of everything that I was hoping really to get out of this first conversation. Hope we can have you back and maybe get even deeper into the weeds on a couple of these subjects.
Sure. Okay. Thanks. Take
Thank you.
care.
Thank you. Thank you. Bye now.
Bye.
And to all of you out there, it's been great talking to you.
Thank you.